Personal income tax is actually the tax imposed on the income of individuals, families, or communities arising from their income, their trade, their profession, or their vocation. Like I said earlier, individuals are subjected, families are subjected, communities are subjected, those from diplomatic missions are also subjected to tax. Members of the armed forces are subjected to tax. Residents of Abuja are subjected, or the FCT are also subjected to personal income tax, and so on and so forth. The list is exhaustive. Okay, the gross income of the individual should be considered. And when I talk of the gross incomes of the individuals, I mean their basic salaries, allowances, bonuses, as well as benefits in kind should be considered. Then the next item of importance that should be considered is the consolidated relief allowance, which is a statutory relief. We also have other deductions and relief, such as National Housing Fund relief. We have life assurance premiums that were paid, and other forms of relief that should also be considered. Then the next item is exempted income, that also, like gratuity, should also be considered. And we should also consider the chargeable income. The chargeable income is after deducting the statutory reliefs from the gross income, that becomes a chargeable income. So it's also an item for consideration, after which we then do a computation for personal income tax. When the computation is done, it becomes a tax payable. When the tax payable is being done, then we have the minimum tax, because the minimum tax has to be compared with the tax payable in order to see if the minimum tax is higher or the tax payable is higher. Whichever one is higher will be what will be taken into consideration. These are basically the items that should be considered in the computation of personal income tax. Okay, there are actually two processes that are involved. We have the first process is for employees, and the second process is for individuals. For employees, we have two forms are actually necessary to fill. We have the Form A, which is the employer's annual declaration form that should be filled. In the employer's annual declaration form, you have the individual gross salaries and their respective pay tax that was deducted in the previous year, and then that will be taken into consideration. We also have the Form G, which is employer's remittance card. So both the declaration card and the remittance card are used to file the annual returns for employees, and then following which, then it is necessary to apply for tax clearance certificates for the individuals. But that is subject to the tax authority's confirmation that what was filed in compliance with the law. That means that the filing has to be accurate. Where there are inadequacies, then the tax authorities would now have to communicate to the company and saying that there are differences. Such differences will be looked into and will be rectified. Then at that point, the tax authorities will now issue tax clearance certificates or tax cards in the case for some tax authorities. Meanwhile, the filing the filing process also follows electronic process. It could either be electronic or it could be manual. That's for employees. For individuals, we have what is called the Form A. The Form A is used to file each year for individuals. In that Form A, all income from all sources are disclosed in the Form A. Reliefs and allowances are also disclosed, and taxes are computed and filed with tax authorities. The tax authorities also have the right to review what was filed in order to ascertain that it is it is accurately deducted, and the accurate taxes are paid. Otherwise, they also have to write back to the individuals and requesting for supporting documents for them to be able to ascertain the taxes paid. So at the point where the such documents are provided and the tax authorities are satisfied, then they are able to issue tax clearance certificates for individuals, including directors, those who are self-employed, and so on and so forth. Meanwhile, the filing deadline for employees is 31st of January of each year, following the year in which the income and taxes were paid. For individuals, it is 31st of March of each year, also following the year in which the amounts were deducted and taxes were also paid. The penalty for not filing personal income tax is 500,000 naira in the case of companies, and then 50,000 naira in the case of individuals.